Okay, good morning, traders, and welcome to Trade the Structure and the Morning Jumpstart. We're going to go over to a weekly review now, we'll take a look at some daily charts. Now, we're just coming to the Asian market session. I think it's a good time to, beginning a new week, just to get into some longer term charts to see where the key levels are, see what's happening. If you're an index trader, it's not so great unless you're short. If you're a share trader, yeah, it's not so great at all. We're just taking a look at the overall markets and some risk assets. The general markets, so we've got the indices. We can take a look at some dollar index, some currencies, gold, oil, crude. You can see all these down the side, which I look at. And obviously, we'll have a bit of a drilling on Bitcoin and Ethereum. I know that's an area which is really coming under the hammer at the moment and unwinding a bit. So there's some news I saw this morning on Solana. I'm not exactly sure, what they do, but they're looking at freezing a large account that wants to hit the market, potentially selling to that market. So, that goes against the fundamentals of the actual cryptocurrency, which is going to, I reckon, create a few shockwaves through the space. So it could be a lot more downside. I would expect there's more downside um, to come before there's any sort of upside into that crypto space at the moment. It's a massive unwind at the moment is what we're looking at. So we'll take a look at the major indices. We stick to the daily charts. We've got the S&P 500 here. You can see it's been a massive uptrend. That was the big sell-off, big uptrend since. Okay, now we're starting to unwind. We've got this major resistance zone coming through here. Once we start to break down out of that uptrend, you got the extensionary move down to 3620, which is basically the same sort of move down. So potentially right where we are now at 3620 or that sort of 3600 mark may be a bit of a line in the sand. There may be some buyers start to dive in there, some bargain hunting, but generally that daily chart, the trend is still down. So, you just don't dive in there because there is absolutely no reason at this stage to buy at that 3620 area because the market can continue down. I mean, just because I've got this extensionary level down here, I'm just drawing in areas where there may be some interest. Okay, it's not the fact that it's going to pull up there because the price action itself is showing no sign of let up at the moment. We've still got EMAs are definitely down. It is a little bit extended. Momentum's down. It's rolling over again. So all signs are that we're heading lower. Okay, we need to see, if you want to be jumping in long, and this goes for the other indices as well, you need to see something where it's going to give you some sort of high low, like that, where you can actually risk, you can manage your risk from. At the moment, when it's coming into a support area, there's no managing risk. You can only manage risk on the downside. You can't manage it on the upside because where you're going to put your risk. You put it here, goes lower, you get stopped out. You try again, you get stopped out. You can get stopped out 3 times, give up, and then see it pop up as you expected. So until you've got some sort of area where you can manage your risk, it's not worth jumping into. So over to the Dow. Dow's much the same. We're coming to this level here around 29,400, and looking at a daily, look, that's not a confirmed level just yet. We've got that where it's reacted down off coming to the pandemic. We sort of toyed around with it, then popped above it, later on confirmed it, and then went up. So at the moment, we haven't reconfirmed it just yet. We're still coming down into that level. So just like the S&P, don't go diving in off that level until you find some sort of, drop down a time frame, drop down to an hourly chart, half an hour chart to find some sort of confirmation, or just wait for your daily to give you that higher low to work from, to manage your risk. But at the moment, that trend is still down. Okay, we haven't seen anything that's going to change my mind at the moment. Nasdaq still under the pump. To me, that could have more to go. We've got these minor little levels in here, which is trading down into, but they're only minor levels. The bigger level would be, I would suspect, is down at that 9,600 area. At the moment, we've got this little minor level, 11,600, 11,600, which it hasn't really tested. It's not anything until we sort of pop up and reconfirm. We did pop up into that zone. When was that? The 15th, so last week. Popped up, rejected. So the US is closed tonight. So it could mean that we're going to have sort of more range-bound action in the Asian markets and the European markets. Not do too much. They could just as easily roll over. We don't know. Like I said, with the other two, the trend is still well and truly down, and it's the lower high, which is anchoring that trend down at the moment, is around here. Say for argument's sake, get 13,125, this little lower high in here. Okay, so for now, until that breaks, the trend is down. Or if you want to start to jump in long, wait till you get that high low to work your risk off or manage your risk off. Okay, the DAX could potentially go a lot lower soon. It's not looking too crash hot. You've got this, markets pushed up. You can see that starting to roll over. That was pretty clear. You've got this extensionary leg down. It's had a good bounce back, and you got that secondary leg down would take us into that 11,350 area. Now, ECB is talking up rate rises, so there's going to be pressure into that DAX, I would suspect as well. Going forward, you've got this minor double top. I call it a retest fail. That's holding the action down at the moment of 14,550, for instance. Okay, so at the moment, pressure's down, just like the other three indices we just looked at. The S&P down, NASDAQ. The trend is down. Okay, that daily trend is down. It's a little bit extended. So, I mean, just remember when you've got a good solid downtrend, some of the biggest bounces can happen. Okay, and I think in history, if you go back and look, some really big bounces when you're talking about rallies can happen in a major downtrend. Okay, so maybe we can see that. Everyone can drag in, have a good bounce, and then turn around and dump on them again. Okay, but for me, that trend is down. A bit like the UK, the FTSE. You can find that resistance zone. So if we go back to that, you can see it's tested it quite a few times now. That was something we were looking at it and we spoke about a few times in previous posts, previous rundowns, and that was kind of the key area that was holding. Okay, you got intraday fluff where it's sort of bouncing through levels right up until basically the US said CPI's still very, very high. We're going to raise rates. They raised rates 0.75%, and then the markets turn around and head south. Okay, now UK's just raised it, I think 0.25% last week, end of last week. That might have been Friday or Thursday night. Raised it 0.25%. So again, inflation, high inflation that's not coming down. Rate rising, the start of a rate rising cycle, I would expect to put pressure across these markets. Now, a few have already factoring it in, but when you look at the bigger picture, where it's come from, it could easily go a lot further. Okay, so for now, we've got our eye on this one as well. FTSE, I wouldn't mind seeing a bit of a lower high, a bit of a pop up, produce a lower high, and then see if we can get through that 68.28. Once it gets through that 68.28 level, I think it's going to crack, because that means that it can go from a sideways range-bound market between these two major levels to a trending market down. Okay, at the moment, it's not trending down. It's broken sort of this uptrend. It's rolling over off a really major level. But until we sort of get through that level and maybe hold a lower high, I think you sort of got to treat it as a range-bound market. Could just jam into that level and bounce all the way back up to 76.83. Okay, so either way, you're going to manage your risk properly. ASX 200 has been under the pump. Okay, so we've got this big move off the all-time highs around, say, around about the 76.20 area, 76.16. Markets held, you can see that a triple top up there, a double top. Okay, there's one thing, a triple top leads to a bigger sell-off. So once you get this kind of a move up, you get a correction, you get this double top. The market's got to flush the most recent high low, which it did, flushed straight back up. Okay, got back up there and failed again for a third time. So it's got to flush this most recent high low, which is down here. Okay, which is down at 67.60, for instance, or 67.69. Okay, flushed that. Now we're coming down to an area where, look, it doesn't mean because that marked it up doesn't mean it's going to hold. It could go down to the next level. Okay, so 63.80 at the moment is what we're watching. If that starts to hold up or showing signs it's going to hold up, okay, fine. Then you could start potentially working some longs off that area. If it's not, then you'd be looking down to the next level, 61.72, and so on. Okay, so for now, the trend is down on that daily. It's there's no real anchor. I would say potentially this level here around 66.80 thereabout. You've got this little minor level in here. If you break it down to a lower time frame chart, you could probably see it a bit clearer. But that would probably be the anchor to the downtrend. You can see that's well and truly extended. The move down is really extended, so not a reason still to buy. I mean, markets are in fear mode. They could drive down a lot further than what you expect. Okay, so don't stand in front of a running train or try to catch a falling knife, I think is the saying. All right, onto the Hang Seng, the Asian markets. Hang Seng's working its way down as well. It's probably in a better position than the others. They had a big sell-off when that Evergrande and their housing market unwound a bit. I think they've still got more to come from what I read, so there could be more troubles there, and that's a massive debt trouble, with the housing market over in China. Well, Hang Seng looking at China, obviously, then that could mean that we're going to head a lot further south. Okay, so that's, to me, you got this level through here, 22,500. Still holding that trend down, had a big flush into 18,235, and it's since worked its way back up. But you can see the anchor to the downtrend for me is really that 22,500. Okay, unless it, if it keeps pushing up and it breaks through that level, there's a chance that we're going to get a big move, back up again and unwind a lot of these short positions, or get some buys to step back into the market. But at the moment, we're holding below that level, and we could shop around here. I actually still think we're going to get through. You can see this minor level here, 27.31. We're holding the lower high, so that one leg down, if you just measure that out, okay, that could easily take us, if that's a lower high, back down and through that level, coming into some of these lows here, or even taking us straight down into the 18,235 area. I think won't really happen today. I wouldn't be surprised if it flushes that level, but bounces back. I think it might be a bit more contained today, considering the US is closed tonight. Okay, but the Hang Seng, yeah, they do their own thing. Over to the Nikkei. Now the Nikkei's, it has opened today and it has popped up. Just looking at a different chart across the other screen, and it has popped up, but it's really just flushing into the highs. We've got on a daily basis, you can see that market has been really extended to the downside. It's extended into that 25,770 area. Probably just get that looking a bit better, a bit lined up. You can see those levels there. Has extended into 25,770. Got a double top retest fail at 28,320. So for me, that retest fail, when that trend is down or looking like it's potentially rolling again, it's going to take us down to that 2,400 area. That's what I'm looking for at the moment, and really push down a fair bit lower. So that's 1,000, 17, nearly 2,000 points, I guess, from where we are at the moment. Okay, so what we could expect today, I would expect this level to hold, 25,770. It is 300 or 400 points from there at the moment. We could just bounce off that level. You have to wait and see how it goes, but it is, like I said, it's getting a bit extended. You can see it's been gappy. So it's gapped down, pushed down, closed down. Okay, gapped again, closed on its lows, kept going down, gapped again, had a bit of a pop up, and then we gapped right down into that level. So, today's, I would suggest it's going to be a bit more contained, but the general trend on the daily chart to me is down. Okay, I would probably be looking for that higher low. Maybe we get some sort of action over a couple of days like this, and then see if we can get something like that to work off, a shoulder, okay, to work off, and that's a major shoulder there. So that to me could see us move react down into that 2,400 area, and it's worth it. It's worth a crack there if that price action starts to play out. Over to some currencies now. We've got the dollar index. Now the dollar index, when they're talking up CPI is higher, so the market was sort of factoring in, two things, maybe a weaker than expected CPI, and for the Fed to come out and be a bit more aggressive. Now the Fed's turned around and said, yeah, we're going to raise rates, but don't expect this to happen all the time. 3/4 of basis point, 75 basis points, 3/4 percentage point. All right, so it's kind of caught a lot of shorts off guard, and the market squeezed them out, and the market's popped back up again because, one, they haven't got it under control, inflation, and two, they don't really want to. They're not talking up getting under control. They're not talking up being aggressive, and they don't want to do that. I think because the market could crash. They could come out and be aggressive all they want, but I think they're going to talk it down as much as they can to try to ease this market to the downside. Okay, especially on your share markets as they start to unwind risk assets. All right, so for me, we've pushed up into these highs at, say, 105. These highs up here, we flushed the highs, we've come back down. Now, are we going to hold that level? So that 105 or 104, 985 area, are we going to hold that and start to squeeze out some of these buyers, or are we going to keep chopping around in here and keep pressuring higher? I think what the market will be looking at is that, okay, we are going to the rate rising cycle. The Fed Reserve is raising rates. Inflation is at all-time high, so to stretch further on the upside might be a big ask. It could be just as easy if the Fed come out another 75 basis points and they start to talk about being more aggressive on interest rate rises. Then the market will roll over. Okay, you'll get a lot of these longs get squeezed out. Okay, so for now, it is heading higher. The trend is up. That hasn't changed. It would just sort of get into an extended level. Okay, so flick over to the euro. Some other majors. We're only going to go through the euro, the pound, the Aussie, and the yen, US yen. That's pressed into some lows. So you can see this. This for me is a major level through here, an inside level at that 105.05, and then you got this extension level. I would say at 103.48 or 103.50. Okay, this extension level where it extended through that support, bounced straight back, retested it, and kept going higher. Okay, we've extended through there, and we've got this minor, double bottom in here or retest fail at 103.48. Doesn't mean we're going to go higher, but what it does mean is just be careful if you're going to go short. Okay, because you're potentially going short into when the dollar's extended, the US dollar's extended. Don't forget we've got the ECB talking up rate rises, which would mean some buying coming into that euro. As a side, to the whatever happens to the US dollar, but some buying or support coming in the euro because it's got a higher interest rate attached to it. So the yield between the two is coming in line more. Okay, if the US dollar they're talking up rate rises and the euro is not, then you've got that they'll be selling the euro, buying the US for that interest rate yield. Okay, but when they start to come more in line, then you start to get that unwinding effect, and maybe that carry trade is unwound a bit. Okay, but for now, it's still. The market's down. It's been held down at 107.67. If that starts to break, then we're going to get a bit of an unwind of these shorts. Okay, pound, it's very similar in a way. You've got this major support zone. It's pressed into 120, 1,200, 1.2. It's coming to there, had a big flush here, held the level, bounced straight back up again. Now we come back in there, we've really extended and expanded into that level. You can see a bit of divergence potentially forming. Okay, we've got that big extension down with a higher low here, and then we made a new low, and the momentum's starting to wane. Okay, so potentially that's the same as euro, with the pound starting to raise rates. They're maybe playing catch up. The US dollar could roll over, depending on all these sort of scenarios. I would expect on a daily basis, they're kind of extended to the downside quite a bit, and then into some major levels, major support levels. Okay, over the Aussie, it's sort of the same sort of scenario. RBA is looking to raise rates, they're extended down, but if the market takes a bit of a downturn, we might cop it a bit more than say the other two currencies we just looked at, because of being commodity traded, and I guess just commodity traded with relation to commodities. If there's an unwind in the indices, you tend to get a bit of an unwind into the Aussie too, and you've got this double top or retest fail at 72.73, holding the market down. No reason why this can't extend. So you can see it held through here, 75.60, pushed down, bounced up, held through here, pushed down. So we could just, we could extend on those lows and then continue to, press lower. Okay, over to the US yen now. This is a big one. We're talking up intervention from the BOJ. They haven't said anything. They haven't done anything yet, but they've said it. And the more they say it, the more the market's going to get nervy, and the more the time will come where they may have to be forced into doing something. At the moment, we've got this, pressed down on that 135 level, and then some news come out which disappointed traders, and the market bounced straight back up again. Okay, they were probably expecting some intervention, didn't come, so bang, there's just a bit of a short squeeze. Okay, but we're still hanging around that level. There's still potential for a big unwind of these longs. Okay, so you got US dollar longs, yen shorts. They're more concerned about all the shorts built up into the yen. Now, if they turn around and unwind, the market's going to head south. All right, over to gold. Gold is pressing lower. We'll have to whip through these. We're running out of time soon. So you can see this, to me, on a daily basis, that's looking good. That was a good sort of trend, push up, pull back, held this level, started to trend up and failed again. So that's a major RTF at 2073 on a daily basis. So there's a lot of gold bulls out there, but when you look at this daily chart, this rising trend line, it didn't hold, it started to break. To me, that's a lower high, which means lower levels. Okay, so if 1870 holds, expect to get down to 1785 and potentially trade into 1682. Okay, so I wouldn't be too bullish on this just yet. Actually, no, I wouldn't be bullish on this at all. Okay, it's failing to be an inflation hedge, failing to be a risk, a safe haven. It's just purely going to the US dollar. So I mean, if the US dollar unwinds a bit, then you're going to get a bit of bounce in gold. So I think that's the only thing that could save it. Crude had a good sell-off, but that trend is still well and truly up. Okay, so we're coming to that 107, 108, 78. May extend a bit lower. Wouldn't be surprised if it sort of flushes a bit lower and bounces back. But for now, that trend is up. We could be looking down the track, attacking those highs. If we start to bounce from, if we start to push in that 102.82 area and have a good bounce back, I'll be looking for that shoulder and a deeper push down. Okay, but for now, that trend is up. This is, sort of that dynamic trend line. It's holding to the upside. It's just a bit of a flush of some of those late longs, and it could just do what it's done before. Flush down, rally up, flush down, rally up. So it could be just doing the same thing. So I'll be looking around this zone to see how the action plays out. Okay, over to copper, and then we'll finish up on some cryptos. Copper, struggling a bit. It's pretty much range bound at the moment between that 4.0075 and that 493.15 area. Okay, these highs, you got the shoulder in here, lower high, come off that RTF or double top, potentially a triple top as well. Moved all the way back down, had a bit of a bounce back to 456.95 and come straight back down into that zone. That's been weighed down by that high US dollar as well. So if the US dollar comes and unwinds through sort of up at those highs, then you probably get a bit of a bounce back into copper. But for now, that trend is potentially looking to break through this level. Now, be careful that you're not going to go short in there and it's just a flush, okay, which you could easily do. For me, I'll be treating that as a range at the moment until we get some sort of, a bigger confirmation. You get something like that, come back in, start the failure here, then look for a move to the downside. But if we sort of come down, bounce straight back up again, I'll be expecting that's more of a flush if we get straight back up into that level. Cryptos. Now, cryptos, like I said, under the pump, under pressure, heading south. Bitcoin potentially trying to find a base around that 19,000 area. We'll just have to wait and see. If that doesn't hold, which it potentially could, I'd expect there to be some bargain hunters. It could lift. Now, I think that's on the back of that Ethereum, which is holding quite nicely. Now, that's our initial leg down. I marked up a long time ago, and that's our secondary leg down. So you've got a push down, that started to fade. You've got this move up, higher low, worked back up to that 36.10. Then we failed again completely, and that's really unwound. Now we've come into that extension area around the 800 mark, or 805, 810, whatever you want to say. It's kind of reacting up, off that zone. Doesn't mean it's going to bounce, but there's a chance that it's going to start to get some buyers, and you're going to start to get some of these shorts unwind, okay, and start to take some risk off the table. But for now, trend is down. We really could go a lot further. We have to wait and see. So for longs, I'm just like anything else, look for that high low. All right, guys, thank you very much for joining me. We'll finish it up there. Remember to take a look at the website, www.tradethestructure.com. Take a look around and email me with any questions you have. Speak to you soon.